Wall Street is finally awake to crypto, pouring billions into the market. But they're only looking at the surface. While they focus on the obvious plays, the real smart money is following a completely different set of signals. And today, I'm showing you exactly what they are. Welcome to the Generational Wealth Community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. This isn't financial advice. It's a look under the hood at the on-chain data that shows what sophisticated investors are buying just before the next big move. We're going to decode 5 key signals that traditional finance doesn't see, giving you a roadmap to what could be coming next in the altcoin market. The first and most powerful signal is one that traditional market analysis almost always misses: high trading volume combined with a sideways price. When a fund wants to build a massive position in an altcoin, they can't place one giant order without sending the price skyrocketing. Instead, they accumulate quietly. They buy in increments, absorbing all the coins that impatient retail traders are selling in a tight price range. To most, this looks like a boring, flat period on the chart. But if you look at the volume underneath, you'll see it's unusually high. These volume spikes are the footprints of smart money loading up from weak hands who are exiting out of boredom or fear. Once that selling pressure is absorbed, even a small amount of new buying pressure can ignite a massive breakout. We've seen this exact pattern of stealth accumulation happen right before major rallies in Layer 1 coins. The second signal is a big picture indicator that tells us where major capital is flowing. It's called USDT dominance, and it tracks the market share of Tether, or USDT, against the total crypto market cap. When USDT dominance is high, it means investors are cautious, holding their capital in the relative safety of stablecoins. But when USDT dominance starts to fall, it signals that capital is rotating out of stablecoins and back into riskier assets like Bitcoin, and more importantly for us, altcoins. As of mid-March 2026, USDT dominance is testing a multi-year resistance level near 9%. A rejection from this level has historically signaled that money is moving off the sidelines and getting ready to be deployed into the market. Before we get to our next signal, which shows how smart money uses the futures market to get ahead of big moves, take a second to hit that subscribe button. If you're getting value from this analysis, it's the best way to make sure you don't miss what's coming next. The third secret signal is found in the derivatives market: rising open interest while the price stays flat. Open interest is simply the total number of open futures contracts for an asset. You can think of it as the total amount of money betting on where the price will go next. When you see open interest climbing steadily while an asset's price isn't moving much, it's a huge tell. It suggests sophisticated traders are quietly building large, leveraged positions because they anticipate a big price movement. They use these quiet periods to fly under the radar. As of March 19, 2026, Ethereum's derivatives market is showing a cautious but bullish tilt, with open interest on major exchanges like Binance and CME remaining high despite recent price dips. A continued buildup in its open interest can often signal that a wider altcoin market rally is on the horizon. Next, we zoom out to check the health of the entire altcoin ecosystem with one single chart: the total 3 market cap. This chart tracks the total market value of all cryptocurrencies except for Bitcoin and Ethereum. This is crucial because it provides a pure, unfiltered view of the altcoin market's underlying strength. As of mid-March 2026, the Total 3 chart has shown signs of strength by moving above key resistance levels after forming a series of higher lows. This sustained move suggests that broad-based momentum is returning and that capital is flowing across the wider altcoin space, not just into a few popular projects. It serves as strong confirmation that a true alt-season may be gaining traction. Finally, our last signal requires us to look past the price charts and directly at the fundamental health of a project. Price can be misleading, but on-chain data doesn't lie. Using tools like DeFi Llama, we can analyze metrics that many traditional investors don't know exist. 2 of the most important metrics are protocol revenue and total value staked. Protocol revenue shows which projects are generating real income and have a viable business model. Meanwhile, high staking numbers reduce the available supply on the market. For example, networks like Sui have a staking ratio of over 74%, while Near Protocol has over 45% of its eligible tokens currently staked. When you find an altcoin with strong on-chain revenue and a high percentage of its supply staked and locked away by long-term holders, you may have found a deeply undervalued asset the broader market has yet to recognize. So there you have it, 5 key signals that paint a picture the headlines often miss. High volume with a sideways price, falling USDT dominance, rising open interest on a flat price, a total 3 market cap breakout, and solid on-chain health. While Wall Street giants like BlackRock and Fidelity continue to deepen their involvement through Bitcoin ETFs, these on-chain signals give you a real-time view of what smart money is doing right now. They provide a different roadmap for navigating the market. Stop just listening to the old guard and start paying attention to the blockchain itself. The data is all there, waiting for you to find it. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer: I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.